Hello and welcome to Hot Money on BloombergQuint Live, India's first digital live streaming business news service. This is a show which gives you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our guests on the show. Joining us today are Vineeta Sharma of Narnolia Financial Advisors, and along with her are Sharmila Joshi and Vivek Momani, who are independent investment advisors. Many thanks to all of my guests for joining in. Today on the show, we ask our guests whether Bajaj Finance is a good bet at this level. Remember, the stock has seen a big run-up after its fourth quarter numbers and one of the best performers on the Nifty. It's trading at record highs. We analyze the results from UPL, whether they were good enough to warrant a buy at current levels. Remember, even UPL was trading at record highs, but the numbers somehow disappointed. Spencer's Retail has purchased 100% stake in Godrej Nature's basket. We discuss the prospect for the stock and the retail space in general. And finally, pharma stocks are facing a slew of headwinds yet again. Weak commentary both from Lupin as well as Dr. Reddy's. We discuss whether it will be apt to avoid these stocks given the recent spate, or is it the time to start accumulating some of the pharma stocks. So that's something that we will speak on. But the first stock obviously is Bajaj Finance. Again, it's up another 2% in trade today, has managed to rally close to 15% just from the time the results started coming in. Ahead of the numbers, it moved up, and till now it's gained almost 15% in the last 1 week itself. Is it a good time to buy Bajaj Finance? Our valuations are concerned, or will this robust growth continue? And in this case, is there any other alternative in this space that you should buy, or would you buy Bajaj Finance only because there's no other alternative? So Vivek, what's your sense? Bajaj Finance almost 3,400 now. Valuations obviously not the cheapest, trading at record highs. What should one do on Bajaj Finance?
Well, as far as Bajaj Finance is concerned, at about 8 times forward price to book, or 7.5, 8 times forward price to book, it's certainly not cheap or a bargain. You cannot call it a bargain by any sense. But the hyper growth phase that it is in, with 30% earnings growth quarter after quarter, year after year, seems to be sustaining. So, I mean, history suggests across sectors, across stocks, over the last 25 years, that stocks or sectors, when they are in hyper growth phase, the high valuations also tend to sustain till the growth hits a roadblock or a speed breaker in that sense. So we have looked at, so I could draw a parallel that Titan also trades at very rich valuations, but Titan manages to deliver 20, 22 or 25% earnings growth quarter after quarter, and also guides at 20% growth for the coming. So in Bajaj Finance also, the high valuations will sustain so long as the growth will continue. And this is amidst all the problems the NBFC space, the financial services space, is going through the stress it's going through for the last 6 to 9 months in terms of liquidity, asset liability mismatches, and a lot of the I would say reckless lending which happened over the last 5 years or so in the financial services space. All of that coming to haunt most of the new players. What we have in Bajaj Finance is a very clean, pristine book, very high risk management, very high underwriting skills in terms of what business they undertake, what business they don't. And amidst all the problems the sector is going through, I think Bajaj Finance over the next couple of years has a better opportunity to not just take market share from the other NBFCs, but also from private banks. Because Bajaj Finance has got no funding issues, it's got no asset liability mismatch issues. I mean, none of the problems that others face, Bajaj Finance doesn't have that. So it'll, as a matter of fact, it gets better for Bajaj Finance, just like HDFC Bank or Kotak Bank have done over the last maybe about 10-15 years. Bajaj Finance will do it in the NBFC space. To the last question, is there a choice? Well, the choice is one could get into other NBFCs which have similar strong business and profiles and management profiles, and 3 other names come to my mind. One is a Mahindra Finance, which also is fairly strong and unlikely to face any problems which the rest of the sector is facing. The other is Shriram Transport Finance and Shriram City Union Finance. The fourth one could be Sundaram Finance. Barring that, probably most of the others are going to be hit at some point of time or the other, depending upon the intensity. But as far as Bajaj Finance is concerned, I would continue to hold. Every decline is a buying opportunity from a long-term point of view.
Okay, buy on declines is the strategy that Vivek is speaking about for Bajaj Finance. Sharmila, is that a similar strategy that you would follow, or you have a different approach?
Well, you know, I do think that as you have been discussing, numbers were good, and I think that what has happened with the entire NBFC space is something that, you know, we are all sort of aware of, and We know the stress points there. So I think going ahead, investing in NBFCs per se is not without risk, in the sense that because the entire gamut of stocks is seeing different degrees of pain, it's very difficult to sort of escape some amount of sentiment hit. And I think in that environment, Bajaj Finance and Bajaj Finserv, both the Bajaj twins, have really done very well. And if these numbers are anything to go by, the management always said that that they have a very granular approach to growing the business ahead, because they've been growing at a very good pace for many quarters now. So there's always this question mark that whether they'll be able to sustain this kind of growth. So I think the important thing is that the management has said that their approach is very granular, and I think it is getting evident as they keep delivering these kind of numbers. So in a line, yes, I think you can buy the stock at this stage. I think there is an upside. Valuations are rich, but I think that's going to be the game going ahead. The better stocks which have lesser stress elements within their books are going to get rewarded. So going forward, you have to pick your NBFC based on that. You can't buy any NBFC, so you have to look at good stocks where they aren't feeling the pain of those issues, and then go for them. And I think Bajaj Finance fits the bill.
How is it that they are able to do so well in a market where the others are not able to perform?
A good question, but I think as I said, that they have really drilled a very drill down approach to their book, and they are not doing they've not taken risky exposures. They've been conservative there, and even when they've been lending, they've been conservative there. And that's beginning to, and at the end of the day, the final gap was bridged by these NBFCs, because they reached a person and a lender or borrower where banks couldn't reach. And I think that has sort of paid them a good dividend over the years. And so I think that's a strategy that's worked for them, and they seem to have understood their market well.
Okay, so that's a double thumbs up coming in for Bajaj Finance. Vineeta, do you all have Bajaj Finance under active coverage? And if yes, so what have you recommended in the report?
So Bajaj Finance, we are currently neutral on the stock, and we are not recommending any fresh buy at this point of time. There are 2-3 reasons. First, the good part that the AUM is growing very well. There are stable NIMs and the management pedigree, etc., etc. They all fall in positive for Bajaj Finance. The concern here is, one, the consumption slowdown that we are witnessing right now in the auto space, as well as other consumer durables. Second, the exposure right now, they are taking some ECBs to fund their growth. I think that will put the NIM little bit under volatile because the cost of funds will be put under risk. As well as if we look at the entire space, if we look from the valuation point of view for Bajaj Finance, the moment the company had corrected, it had fallen down to 3.8 times forward price to book. And I think they are those are the times when you can get into a stock like this, because once the tide is positive for these companies, the valuations are running high, and any slight negative on the growth side can really dampen the valuation. So if you have not bought it at the right valuation, and things might turn on the negative side also regarding the growth, it can get little slower, and if the valuations get down, in that case the investor will be at a loss. So it's better to have that kind of a trade-off.
At what level would you advise your clients? Because it can't fall another 40-50%. That's a blue sky scenario, because it happened once because of demonetization. Right. But if someone wants to take an exposure, at what level will you start telling your clients to start accumulating Bajaj Finance? It's at 3,400 right now, or?
So it's more about, if once we see the consumption slow down, the auto sales numbers, because that should give a positive boost to our re-rating of Bajaj Finance. And one thing good in this company is that most of the sales are coming from the same buyer. So whosoever has been, so repeat customers are there for Bajaj Finance, and now they'll have to get in more deeper into penetration. So one is the consumption outlook, because this is the first time that they have also commented in their commentary that yes, it has started pinching. And so I think that would be one point from where again Bajaj Finance could be re-rated.
Okay, that's the view that's coming in on Bajaj Finance. Two of our guests are believing that it's a buy on dip and extremely positive. A neutral view coming in from Vineeta and Narnolia Financial. The next stock we want to talk about is UPL. Now, UPL also came out with numbers on Friday. Prima facie, the numbers are actually disappointed. This time around, remember, they had actually incorporated the Arista numbers into the numbers, but somehow the numbers were not the best. But what's the way ahead for UPL? It corrected on Friday and managed to recover today. Sharmila, any view on UPL?
Oh, well, in fact, I have a positive view, because I think that when they did that acquisition of Arista, there was a lot of negativity in terms of the cost and how they're going to, how much it's going to contribute and what is the debt situation going to look like, etc. So yes, I think the climb down in profit is because there was that one-time exceptional loss. So I think if you account for that, and if you look at the jump that they've seen in revenues, I think what it indicates to me is that now Arista contribution is beginning to reflect, because they had only 2 months reflecting in this result. And the fact that all the debt concerns that were there, that how are they going to manage that, etc. All those fears will also slowly start receding once you see that the contribution is significant, and now they're a company of significant global size. So I think those positives will slowly start paying off for them. So in terms of valuations, yes, perhaps you should wait to buy, but I think net, this I'm positive on the stock.
Okay, what about you, Vineeta? You all have coverage on UPL, and what's this view?
So we do not have full coverage on UPL, and it's a company which has 100+ subsidiaries. So all the geographic fronts, if I ask a retail investor to go and buy UPL, he should be always standing at the cliff, and certainly it has, it caters to a industry which is very, very cyclical. So what happens in Russia, the climatic conditions, so there are n number of factors which a person has to keep in mind before they actually buy UPL. It's not very easy to understand. You have to have the climatic conditions, the demand scenario, I mean a lot of things. Purely going on the numbers side, so they have acquired Arista, and they have, it's a sizable firm, good top line is contributing. But the debt scenario for UPL now really becomes tricky, because I think it is debt to EBITDA is, I think, 3.2 times, which is a little bit tricky. On the valuations, if we consider, it is at a lower side of what UPL normally trades. So 7.2 times is pretty okay valuations for UPL. But I don't have a very, I don't have a negative view for UPL. I don't have a positive. In fact, it's difficult for me also to analyze UPL. Okay. So I would stay away from it.
Okay, Vivek, I know you don't track UPL. You want to add anything before we move on to the next one?
Well, I don't track it for one of the reasons mentioned by Vineeta, that it's a company quite complex. I mean, the business model is quite complex, a global geographical spread with I didn't know they had 100 subsidiaries. I did know that they had lots of them, but so I don't really have a view either on UPL or the sector. I have very limited understanding and knowledge about the sector, so I'll just reserve my comments at this point of time.
Okay, that's the view that's coming in on UPL. The next one is the retail space. That's something that we want to talk about. News coming in after close to on Friday was that Spencer's Retail has actually bought in Nature's basket from Godrej for close to 300 crores. But what's the view ahead? Spencer's is down almost 9% in trade. Remember, it listed at a much higher premium, and the counter has corrected significantly. So part of the CSC group. Is this a bad move? What's the way ahead? Will that impact the numbers, and what's the view on the retail space? Vineeta, I'll start with you. Any view on Spencer's? It's down 9% post this acquisition. Was it a bad acquisition?
So see, if we look at from the sales point of view, the company has 300+ crore of sales for the full year for FY18. And they have acquired it for 300 crore. So it's a, from the top line EV to sales point of view, it's a pretty good acquisition. And plus the kind of the kind of presence Spencer's wants to become a pan-India player, plus the geography, it is into a different geography. And but I think on the profitability front, it should be a marked degrowth for Spencer, because Nature's Basket has a lot of imports, and the type of operation of both the companies is very different. So it will take account on as to how they merge both the companies, because I think it's a good acquisition from top line point of view, and right now market is more concerned about grabbing the market share, because obviously it's about 2 years, 5 years down from here, it's about how much market you are having in your share, so that you are able to leverage it for the profitable. But I think on the profitability side, I'm not very comfortable with the kind of acquisition.
Okay, any on the retail front, do you all have any active coverage on any of the stocks?
So we have retail in that sense. We like Titan on the jewelry space. We have coverage on Trent. Trent is also a company. We are pretty optimistic on this retail space. And I think Trent is a good buy. It has changed its format, the kind of store formatting has changed, product formatting has changed. The valuations definitely are costly, so 3.5 times for any retail space on a 1 year forward should be a good point to enter.
Okay, that's Vivek. I believe you wanted to say something.
Well, as far as Spencer's is concerned, okay, we have discussed this stock a couple of months ago also. I'm positive on it simply because of the deep valuation discount. I mean, a fairly steep valuation discount. But first, since you mentioned, the topic is the results. The results were quite, I would say decent on expected lines, as the management has sort of guided at the time of listing in late January, when this was listed separately as a spin-off from CESC. At EBITDA level as well as cash level, including at net level, they break even. So where marginal profits, actually full year only 1 crore of profit after tax if one were to so that may seem less than compared to other, but when one looks at few other data points, gross margins have been expanding. So now they are almost at 22% versus maybe 17-18% about a year back, or even 19% just a couple of quarters ago. Aggressive store rollout, 29 new stores in the last financial year, 10 added only in the fourth quarter. So there's an aggressive store count addition and the retail space addition. The acquisition of Nature's Basket, as Vineeta mentioned, 300 crores. So what they've acquired is 300 crores of sales, roughly about 320 crores of sales at valuation of 300 crores. It's an all cash acquisition, 100%. So Spencer's, when one looks at the balance sheet of March 19, it's a debt-free company and about maybe 260 crores of surplus cash. The 260 crores of surplus cash obviously will get utilized in the acquisition of this Nature's Basket. But even after that, even if you are to look at the valuations on a historic basis, that is the year just gone by, it trades at just 0.3 times price to sales. So you have a market cap of about 1,000 crores on a top line of 2,500, 2,600 crores top line, and breaks even. When we compare that to other retail players, whether it's Aditya Birla or a Trent is at about 4 times sales, about 7 times book value. Spencer's is at less than 2, just about 1.7, 1.8 times price to book. If one were to look at Pantaloon, which was Future Consumer, you have again something like 4 times price to book and 1.5 times sales. We are not even talking about DMart, which is just way off. And I said DMart is also in a different league, both in terms of size and market cap. So compared to other retail players, it certainly is a steep discount. The steep discount is justified because the profitability is significantly lower than others. But Spencer's going forward with their several initiatives that will improve the profitability, which will be richer revenue mix, basically better revenue mix away from FMCG and groceries to general merchandise, apparel, footwear, others where the margins are better, so which will lead to overall improvement in margins, better supply chain efficiencies and economy of scale as the more stores get added. So some of these will take maybe 4 to 6 quarters or maybe even 12 quarters. So it's a story not for tomorrow, day after, or 1 quarter, but over a 2 to 3 year period. Even as the profitability improves, I'm sure the stock will get re-rated and the multiples will expand to something even partly closer to any of the other peer group that we are talking about. So you could have a stock which could double in the next 2-3 years simply because of improving profitability and expanding multiples.
Okay, that's the view coming on Spencer's. And Shamila, what's your sense on Spencer's? Do you like the stock? What did you make of the deal, and anything in the retail space that looks interesting?
Just talking about the deal, I completely agree with what Vineeta said. Obviously, I think all of us agree on that the acquisition price was great because you're getting a sort of one-time sales, and that's always a good thing. So I think the pricing was good. Plus, you're getting footprint in an area in which you had no presence. In fact, which you exited. So I think that's what brings this whole thing into question really for me, because I think that the kind of profile which Nature's Basket has, and very honestly I think if you look at this whole retail space, especially in Mumbai as a metro, if you've been following it, you know that now it's a very nuanced game. So it's what Vineeta was alluding to, that they have a high level of import. So there are a couple of stores like Nature's Basket. We have Food Hall in Mumbai, which that the prices are higher because they have a greater element of import. So the price of goods that you buy are also higher. So it's a very different customer who goes to these stores as compared to, say, who goes to a D-Mart or who goes to a big bazaar. So it's a very nuanced game now. And I don't know how Spencer, with its presence and the kind of stores that they run, how they are going to find that synergy with Nature's Basket. But I think there's no reason for me to believe that they haven't thought this out, and maybe there is a certain direction that they want to take this in, and which is why they've obviously gone ahead and acquired. So I would wait to see how that plays out really before I take a call on the stock, because I think that to just do it to get 36 stores doesn't really make sense unless you have a game plan to take this ahead in a certain way. So let's wait and see how that plays out. Okay,
that's the view that's coming in on Spencer's retail. And finally, pharma stocks are down in trade. Lupin corrected significantly post the numbers. Dr. Reddy's is down another 7%, if I'm not wrong, in today's trade, given the fact that their US business was weak. The commentary was weak in terms of certain drugs. Obviously, there is the big overhang as far as the US fines are concerned, because a lot of 44 states have put up a notification in terms of colluding and overpricing by some of these drug makers, which included most of them. So is pharma a total avoid? Is it a selective play? What should one do? I'll start with you, Vivek. Pharma, what should one do? It's come under the weather. Not all stocks. Some of them have managed to hold up, but majority of them have corrected. What's the strategy if you want to play pharma?
Well, as far as the pharma is concerned, yes, what has come under the weather is only one segment of the pharma out of the three segments that the way I look at it. The one segment which is export of generics to the US market and the developed markets is what has been which has been facing regulatory issues, not now. The latest has been, of course, these 44 states litigating against price fixation and stuff like that. But most companies in that segment have had compliance and regulatory related issues in the last 5 years, whether it's Sun Pharma, Dr. Reddy's, Wockhardt, Cadila, Lupin, all of them, and none of them have come out clean fully. So they still have some pending issues where corrective action is still required. So that overhang will remain for most of these companies which are focused on the US generics market. But if I look at the two other segments in the pharma market, which is the domestic pharma, which has also been growing at, the overall has been growing at 10 to 12%. Certain segments like lifestyle, cardiac and cancer and diabetes are growing at 16 to 18, 20% in terms of growth rates. So companies which are focused in that segment continue to deliver earnings, and so there we have companies like Cipla or an Alchem, Ajanta Pharma, and whole lot of mid-sized companies which of course the big companies, the Sun Pharma and Dr. Reddy's, also have a meaningful presence in the domestic market, but it's just that their international markets always overshadows their domestic business. So the domestic focused companies continue to remain attractive. They would continue to deliver growth year after year. Valuations may be a slight stretch, but in case of Alchem or an Ajanta, but long term there's no doubt, like the consumer space, the domestic pharma is also an attractive space which would deliver double-digit earnings growth and a very high return on equity, return on capital. The third segment, which is multinational pharma, which is where you have the likes of Glaxo and Pfizer, Abbott, AstraZeneca, Novartis and companies like that, which have been in the long slumber for almost 12-15 years, very little interest from market participants, partly because none of the companies have displayed consistent growth over the last 10, 12 years, 15 years. But what we have is most of them have restructured operations, most of them have sold off surplus assets, all of them are debt-free, surplus on cash, cash-rich on the balance sheet, and all of them are also focused on the domestic market. None of them have really export because there's a serious conflict with their parent. Their Glaxo looks attractive given that now Glaxo is heavily focused and investing in the Indian markets, announced 1,000 crores investment over a 3-year period. It happened about last year, so we have still 2 more years to go, which includes expansion of capacity, which includes launch of a large number of new products and so on and so forth. So at 1275, valuations may look rich, but from a long-term growth point of view, I would consider it an attractive proposition. Buy on declines.
Okay, that's the view. India-focused domestic funds, MNC in India, something that would be a better bet than some of the international generics, is something that Vivek says. GSK Pharma is something he likes. Sharmila, Pharma, how should one play? A lot of segments there, as he pointed out.
Yeah.
What should one play?
But I think to my mind, the predominant sort of story in pharma has been the US export story, and for one reason or the other, it's been under a cloud these last 4 or 5 years. So first you had this whole US FDA issue play out, and the kind of warning letters that they sent companies and the inspections, etc. And just as it looked like we were getting out of it, and the only real big concern that stayed on there, which is a big concern that which is still lingers, which is the pricing pressure that you see in the US. So even while we were sort of grappling with that and thinking that maybe these companies will get into products which give them better margins like specialty chemicals, etc. Now you have this new litigation in US on certain companies. So I think the sentiment has gotten hit. Whichever be the segment that you're in, whether it is a predominantly domestic this, or you're a MNC pharma, or you're an export oriented sort of a pharmaceutical unit, I think the sector has taken a bit of a hit from all this news. So I think yes, for the moment, for me, it's an avoid.
Okay, Vineeta, what's your sense? What have you told your clients on pharma?
So pharma, we are staying neutral. We currently do not have any aggressive buy on any company in pharma space. There are 2-3 reasons that I would like to highlight. One is that most of the pharma companies, they acquired companies at the up cycle. So when the cycle was up, they have had acquisition at that point. Now when the cycle has turned negative for them, the kind of asset that they have in their book is now started pinching. So asset turnover for most of the companies is lower. Margins, obviously, one on the top line side, the pricing pressure. Not only US, even Japan or other markets also now they're putting up pressures on the pricing side. Also on the cost side, once the chemical, because most of the product comes from the raw material comes from the China, and if that is if that segment is not very clear, so raw material pressure, the gross margins are already under pressure. Third is the US lawsuits, etc. going on. So also the products. So if we see the the first to file, because of which the margins used to get, so you get 6 months exclusivity through which you get to have a good margin, and that is also that channel has slowed down because the channel of patent expiring has already slowed down. So I think all in all, I do not see a very up cycle for pharma in the next 3 to 4 years.
Okay, that's the view that's coming in on the pharma space. But with that, we're completely timed down on today's edition of Hot Money. Many thanks to all of my guests, Vineeta, Sharmila, Vivek. Thank you so much for coming in today. Ask BQ comes up next. Stay tuned to BloombergQuint.